Imagine being handed exactly $10,000 today. You have no other assets, no property, no gold. You're starting completely from scratch. Most people will immediately fall into a trap called the rush. They get a little money and instantly try to turn it into more money by buying a stock that someone mentioned or whatever crypto coin their neighbor is bragging about. Or they hand that entire $10,000 over to a stranger in a nice suit without having any personal understanding of how money actually works. Giving that kind of capital to an uneducated investor is like handing the keys of a high-performance race car to a toddler. No matter how much potential the car has, a crash is inevitable. Before you invest a single dollar in the market, that money needs to be spent on the only asset that cannot be taxed away or destroyed in a crash: your own financial education. The first step is to use a portion of that $10,000 to find a mentor. And it's vital to understand that a mentor is not a financial advisor. Think of an advisor as a travel agent selling a brochure about a mountain. A mentor is the Sherpa who has actually climbed to the summit, felt the cold, and has the scars to prove they know the way back down. Traditional advisors are often salespeople. They get paid a commission to move specific products, like mutual funds or annuities, because their company told them to. Before you trust anyone with your money, you have to ask them one question: have you actually done what you are telling me to do? Spending money to sit with successful people protects your capital from the expensive mistakes most beginners make in their first year. Step 2 is using the next piece of that $10,000 to buy a foundational skill. Not a degree or a certification, but the skill of sales, marketing, and communication. Many people are afraid of selling, but it isn't about pushing junk on strangers. It is simply the ability to generate income on command rather than waiting for a paycheck. A salary is income someone else gives you, which means they can also take it away. Income from a skill is an engine you personally control. A $10,000 windfall will eventually disappear unless the mind behind it knows how to communicate value and secure a yes. Step 3 is learning how to structure a deal, because the rich don't actually use their own money to build their portfolios. Traditional thinking says you should save your pennies for years to afford a real estate down payment. But by the time you've saved enough, prices have often climbed higher than your savings ever could. Investor thinking is different. A truly great deal will always find its own money. Wealthy investors have plenty of capital, but zero time to hunt for undervalued properties or run the numbers. You have the time they lack. When you structure these partnerships, they gladly fund the deal because you've brought them an opportunity they couldn't find. Once you know how to analyze cash flow and find properties others drive right past, capital will actively look for you. Even with the right skills and the right deals, there are internal habits that can destroy your first $10,000. They usually start with 4 words: I can't afford it. When you say you can't afford something, your brain literally shuts down. It stops hunting for solutions because you've told it the case is closed. You have to flip that statement into a question: how can I afford it? That one change turns your mind into a search engine. It forces you to look for possibilities and puts your brain to work finding a way to make the numbers work. This mental shift is necessary because most fortunes are destroyed by 2 specific emotions: fear and greed. Fear tricks you into leaving your $10,000 in a safe savings account. But as time passes, inflation acts as an invisible force that slowly eats the value of that money until it's worth a fraction of what it was. Greed works on the other end, making you take reckless risks on sure things or hot tips from people who don't understand the market any better than you do. Fear and greed are not financial problems. They are symptoms of financial ignorance. As your knowledge of how money works increases, these emotions lose their power over your decisions. That first $10,000 isn't for the stock market, it's the tuition for a financial education. This is the armor protecting you from mistakes that bankrupt most people, and the first real step toward a financial life you actually control.